Yeah.
Guys, what's good in the financial hood? It's Cash with Dara back here with our third episode, and today we're going to take a step away from the singular learning in depth about one aspect of stock trading, and we're just going to go straight on into just analyzing a stock as a whole. And today, what I've done is I've asked a few of my friends who watch a lot of these other YouTubers that I don't want to say I disagree with, but like sometimes I question their motives when they hype stocks up. And so one of those stocks that I'm is Tesla, and a lot of people are like, "Oh, Tesla, Tesla," and it's in the news a lot. It's a pretty good company, but today I'm gonna explore their stock and whether I would buy it or not at its current price. So, without any further ado, I'm gonna go to Yahoo Finance, which is my favorite site for these stocks, and we're gonna search up Tesla if it loads. All right, so you can see here, just looking at the summary page, gives us a good little summary. I'm usually always going to put the chart to 1 year and then 5 years just to get a look, just to see how the overall trend is, before we get any deeper. So it looks good. It's going up. Had a rough peak over here. Understandable. That was a market correction that affected almost all stocks. We're just going to go to 5 years, zoom out. You can see they were kind of laying dormant, and then coming 2020, they kind of started shooting up. Alright, so that looks fine. Nothing worrisome there. Usually you can see like some pretty crazy stuff in the graph if you zoom out. Whereas if you just just go here, like, oh, you want to get a holistic picture here. I don't like buy things off the graph. It's just a good introduction to the stock. And obviously I've seen Tesla before, but I've actually never gone in depth into it, but you know, for since you guys are gonna be replicating this on other stocks, I gotta do it as honestly as possible without like using any prior knowledge. All right, and then we can just look at here. Oh, this doesn't really matter. Oh, you can see it really shot up from 70 to 900 in the last 12 months. And then volume, 51 million. That's a very sizable amount compared to most other stocks. So it's a pretty hyped up stock. Not hype as in it's bad, but like hype as in it has a lot of transactions. And volume is the amount of like transactions buying and selling that happens. And this is daily. And then the average volume is 40 million. So you can see that today, at least, there was a lot more transactions involving Tesla. Market cap, so it's a pretty sizable company. And then beta, so this means the volatility. And so 1 is basically the S&P 500, and anything higher than 1 is more volatile, anything less is less volatile. That means like price fluctuations. So it's a 2, so this bad boy moves stock price quite a bit. EPS, we'll get into that later when I go to a different tab that has more money generating metrics. And then that's their earnings date, which they're going to announce. So usually what I do next is I scroll down a bit. Here I can see if they've met their earnings calls. You can see they missed it here in Q4 2020. So that if we go on the graph here, you can see that like Q4 of 2020 is around here. So after that, it kind of went downhill. And then their next one is due on April 27th. And then here, this graph neatly summarizes some details that we will be looking at later, but you can see they're not really making any money. I mean, they're generating a lot of revenue, but they're finally positive in 2020. So that might be why their stock was kind of flat and that went up, Not saying it is, but just looking at different things that could influence it. And then in the company here, you can see, I mean, we all know what Tesla does, but in case you don't know what the company does, this is where you learn about it. They make electric vehicles, blah, blah, blah. And I like this chart a lot. It summarizes it in the context of its sector, which is consumer cyclical, not necessarily other electric vehicles, but just this broad sector as a whole. And so you can see that they are generating a lot of revenue. We saw that not really so much as profit. And then on the sustainability side, they're electric, hiring, they're getting a lot of employees and innovation. They're forward thinking and creative. Not really any insider sentiment and dividends. I don't really worry about that because that's not really my thing. All right. Next, I'm going to go to the statistics. Alright, so first we're looking at valuation. Is this company worth the amount that the stock price is currently? And looking at the PE ratio of 934, that's really high. And before it was like in the thousands. Like, that's unfathomable. So right off the bat, this is like pretty overvalued, but you know, it's Tesla. And then their Ford PE is a lot lower, so that gives me some hope. And then their PEG ratio, you know, it's alright. It could be lower, but not as bad. Price of sales is pretty high too. I'd like this number to be a lot lower. Price to book, also very high. I'd like this, ideally in a perfect world, it'd be around 4. I don't know, maybe even 10 is acceptable for both of these because it's like a pretty hyped up stock. But you know, this is kind of ridiculous. And then enterprise value revenue, this should be a lot lower too. I actually talked about these in my last video, and lower is better, and these are not very low. And ooh, this is pretty high too. Yeah, so right now this is telling me that the stock is overvalued. The stock price does not represent the actual like the intrinsic value of the company, but you know, it could be fine. We gotta look at all the other stuff because this is a holistic review process, but straight off the bat it's telling me it's a little bit overpriced. And then profitability, their profit margin, operating margin, but this is pretty self-explanatory. You know, it's 2.29%, 6.19%. Higher is better. I mean, it's positive, so I've seen a lot of negative companies, and negative is no bueno. Positive is good, but you know, I'd like to see these numbers a little bit higher, but it's all right. You know, no red flags here, but could always improve. All right, and then we see the management effectiveness, return on assets, return on all of the things that the company owns, basically. And if the company has a lot of assets, I'd like to see a lot of revenue generated from those assets, and it's only 2.82%. So, you know, I wish that was more as well. And then the return on equity, return on all of the money that the company generates, using that money to generate more money. And that's only 5.42%. I mean, again, positive, but not impressive. Revenue, ooh, they make a lot of money, $31.54 billion. That's pretty impressive. But going back to their market cap, which is 573.94 billion, almost half $1 trillion market cap, and their enterprise value is about the same. So, you know, this is a pretty big company, and so they're generating big amounts of revenue. Revenue per share, 33.80. I actually like that number a lot. You know, the amount of shareholders it has and the amount of revenue it's generating, that's pretty good for the shareholders. Quarterly revenue growth, ooh, that's pretty good. They're growing quarterly. There's 4 quarters in a year. They're basically like fourths of a year, and their revenue is growing each quarter, year over year, by 45.50%. That is good. That's what I like to see. We need more of those numbers. Gross profit. So after all of this revenue, the amount that they get to keep is $6.63 billion. Well, not the amount that they get to keep. That's just after paying their immediate expenses. Earnings before interest, tax, depreciation, and amortization. Ooh, that took a significant $2 billion off of the gross profit. Just from, well, that's understandable because tax is really high. They obviously, amortization and depreciation of their assets, you know, they run a lot of power plants. They got a lot of machinery, understandable for it to depreciate in value. And then net income available to common shareholders, that's a pretty good amount. I like that. Earnings per share, ooh, I wish it was higher. I usually like them at least 1 or higher, but I mean, it could be fine. And then quarterly earnings growth year over year, ooh, I like that. That's a good number. That's a good number. All right, balance sheet. This is just a summary because income statement, I'll go more into that in the actual income statement later. This is just a summary, it gives me a good idea before I go in there if I need to look at anything specific. All right, so they got a lot of cash. They got a lot of cash per share. That's good. You don't want low cash per share. Ooh, they do have a lot of debt, but it should be fine because they have a lot of cash. Their cash is greater than their debt, so that's good. The current ratio, ooh, I like this number right here. This should be at least 1.5, and this is if the company, like, it measures the company's liquidity. So if the company needed to get as much liquidity as possible to cover their debt, could they do it, and how many times over? And so they could do that 1.88 times over, and that's good. Over 1.5 is ideal. Book value per share, book value of the company divided by the share price. Pretty. I wish this was lower, to be honest. Wait, actually, no. Higher is better. Yeah, higher is better. Book value, share is at the bottom. So book value is at the top, which is the money, like the value of all of its tangible assets at the top. So top, higher number, better. This is good, like that. Operating free cash flow. All right, that's a lot of operating free cash flow. Leverage free cash flow. This is my single most loved metric. If you ask me, Dar, what's your favorite thing for stocks? Levered free cash flow. I love to see a positive levered free cash flow. If they don't have a positive levered free cash flow, in my mind, immediately, 90% of the time, I'm like, nope, we are not buying this. Levered free cash flow is basically the amount of cash the company has after it's met all of its obligations, all of its debt, and everything. Extra cash after everything. And $3.4 billion of that is amazing. We like to see that. That's what we like to see. All right, beta, we already went over this. It's boosted a lot in the past few weeks. Went to 900. This is obviously the beginning of the year, but it went all the way up to 900. It's at 563 now, so significant loss on the share price, which is actually good because it helps the valuation go down. Good for the buyers who haven't bought it yet. Obviously, if you bought it at 900, this is not ideal. And then you can see all this stuff. We kind of went over this. Not really important. Ooh. I'm trying to see if there's anything I should talk about here. Percentage held by insiders. That's a sizable amount. That is good. I like to see that. That means the people in charge of the company have faith in their company, basically. All right. That's good for the basic statistics. So just from looking at this, so far what I've come to agree with is that it's valued pretty high. I wish the stock price was a little bit lower, but everything else looks good. Their financial documents look good. They could do better on this, but again, it's a $1 trillion company, and these are positive numbers, so it's not doing bad. And again, it's like pandemic, so I like what I'm seeing. And profile, just in case you didn't see it before, it just tells you where the company is, description of what it does. We already know what Tesla does. And let's go to let's go to the sustainability. So here we can see Tesla versus the rest of the people in it, and Tesla is a little bit more controversial, and you can see if you click on this that what controversy involves, and it's like incidents that may negatively impact stakeholders. Is it on the radar of the press, basically, and is it doing things that could hurt the stock price? And it's a little bit higher than the category average. Obviously, a 3 is higher than the halfway point, so that's a little bit of a concern. Nothing. This is not a deal breaker, but it's just something to be aware of. We all know that Elon Musk likes to tweet out a lot, and Tesla trying to grow as fast as they can. Sometimes they don't make the most. I don't know how to say this, like consciously good decisions, and you guys can interpret that however you guys feel. But just know that the controversy level is a little bit higher than the average, and higher than halfway. Their social risk is a 17.3, and their governance risk is an 11. I'm pretty sure these metrics are out of, I think, 20 or 100. I'll double check it right now. Okay, so the governance risk is out of 10, and this is an 11. And so the governance risk talks about the ethical management of the organization. So you can see, basically, these are all just saying that combined, looking at this, my take from this is that Tesla is, doing the most to grow, and that could get in the way of ethics. So this is just another factor that tells us this is a riskier investment just because of the amount of controversy and governance, social risk, and environmental risk. Although the environmental risk is low because obviously it's an electric company. So, summary of this part, it's a little bit of a risky investment. But it's fine if you balance your portfolio, It's good to take some risk every once in a while. Alright, let's go to the financials. Alright, first we're going to be looking at the income statement. If you guys are new to the income statement, it shows you revenue, and then it shows you how much the revenue costs to generate and how much you get stuck with at the end. Alright, so total revenue. What I usually do on this section is usually, okay, so you know how I went to that statistics tab? If I see something fishy on the statistics tab, I'm going to go here and investigate it. If I don't see anything fishy, then I'm just going over here to see growth. So they're growing. I like this. The cost of revenue, ideally it would go down, but it's going up, which is fine, but not as much as the revenue is going up. Gross profit is increasing. Right here is a little bit stagnant, which is understandable because they had their breakthrough here. And then time trailing 12 months, because 2020 is not up, we can see that too. So, I mean, it's kind of the beginning of 2021, so you wouldn't see much growth. Actually, they're all the same. Oh, because their first earnings thing is in April, I forgot. Alright, so this doesn't really even matter. Alright, and then their operating expense, it decreased and then increased again. I mean, it's not really affecting anything, so it's fine. Again, usually I would go and like inspect something that I saw fishy on the balance sheet, but I mean, it's pretty clear cut before. This is all looking pretty okay. They're finally positive. That's good from their net income. And that you see those decreasing, and then now it's positive. It made a pretty quick turnaround over here. Yeah, everything on the income statement looks good. As we saw before on the income statement, they were bringing in large amounts of revenue. It could be more of an increase, but you know, it's positive and that's good. Let's go to the balance sheet. So the balance sheet is assets, liabilities, and stockholders' equity. And so, as I said, assets are things that the company owns. This is tangible and non-tangible assets. You can see that their assets are increasing as the company increases as well. Their liabilities are also increasing, but not as much. So that means alright, we can see their current liabilities. Current liabilities are things that they owe like now. And there's also non-current liabilities, which are like due in the future, basically, that they have to pay for them. Liabilities are things that they owe, basically. And then you can see the total equity, which is all the money that they bring in. Ooh, look at that jump right here. We can just go into that a little bit. We can see stockholders' equity. So this is the amount of money that they bring in from stocks. You can see it's increasing. Here it kind of bumped as well, a lot. You can see their market cap is increasing, which is good. Company's growing bigger as the stock people like buy more of the stock as well. And then working capital, this is how much money is working basically. This is good how it's increasing. Tangible assets are increasing. I like tangible assets because they're less subjective as opposed to non-tangible assets. The book value increasing. Book value really took a jump here, so they must have gotten a lot more machinery or product or cash or whatever. Their debt actually decreased as their book value increased. That's what I like to see. That's that conversion right there. That's good. Good stuff, Tesla. And then I don't want to keep this video too long, so I won't like go completely in depth. And then operating cash flow. Operating cash flow is the money that they get from operations. You know, you can see that's increasing drastically here. Negative, positive, a little bit more positive. Boom, more than times two. Investing cash flow that they use for investing. Pretty self-explanatory. Obviously it's negative because that's money they're giving away to invest in because they use their money to invest. They're investing more, but still maintaining a profit and going positive on the balance sheet. So that's alright. That's fine if they invest. Financing cash flow, cash from financing activities. You can see that's increasing. Muy bueno, good stuff. And cash position, their end cash position is increasing as well. Very good. If we wanted to see what they're doing with all this, we could keep going in, but you know, we're not really worried about that because it looks healthy. And also I don't have time on this video. And then we can look at their end cash position, all this stuff. Free cash flow, that's what I like to see. Get that positive free cash flow. And yeah, everything else looks pretty good. Again, I wish I could go more in depth. I usually do on my own, but you know, this is a YouTube video and not a documentary. Alright, And then I'll just show you what analysis is. I don't like it though because I don't like trust other people's word for it. That's how pump and dumps work, and that's just what no bueno is. But, it doesn't help to look. It doesn't hurt to look just to get a second opinion, but don't go based on what this says, or don't even look at it. That's what I do. All right, and we're trying to see what I didn't cover. Chart. Let's look at the chart real quick. All right, obviously, since we are long-term investors for the sake of this video, we are going to go to the 1 year. What I like to do is, where is it on here? I usually use a different program for the chart. Just trying to find where the candlestick is. Oh, here. I like me some candles. Alright, quick lesson about candles. Green candles represent one interval. Right here, I have it as 1 day. I'm going to change it to a week, so they're a little bit bigger. Because for 1 year, a week is not bad. Alright, green candle opens at the bottom. That week, it opened at the bottom. That week, it ended at the top. Little black stick is where the price went during that week, but didn't end there. For example, this one. Oh, and then red is the opposite. It opens at the top, closed at the bottom that week. So here you can see it opened at the top, went all the way up here, went all the way down here, closed here. Yep, I'll go. Don't worry, guys, if you didn't understand that, I'll go do another in-depth video on how to read candlestick charts and patterns later, but just for the sake of our video, that's what it is. Alright, and you can see right here, oh, and you can see like the longer the candles, usually that takes more volume, more people investing in the stock to push it up. So right here, it's kind of slept on. Also stagnant price, Oh, and this bottom right here shows volume. So you can see, it's looking good, looking good. A lot of green. That means each week it was going up for the past year. Right here, it took a little dump, but not really. It's more of a correction, nothing to be worried about. And then it has an upward trend. We can put some indicators in here. I'll just use the moving average because it's simple and easy to understand. It's just the compounded all of these candles to see the pattern. And this is the 50-day, or the 50-day, I think. And then you can see upward trend. There's more. I'll go over that later in a different video again. Sorry, there's a lot of that in a different video, but it's just because there's so much, and I'm just trying to make this one a little bit basic because I'm doing everything, and then I can do more in-depth isolation lessons, if that makes sense. Alright, we'll just go to 2 years. Loki looks the same. We'll go to 5 years. We'll change this interval to month. Oops, a little bit too far. Alright, so you can see it from right here, basically, it shot up. And then it took a little bit of a dip. As you can see here, like it tested new boundaries, but ultimately the stock could not support itself this high. So, it's just really not meant to be that high yet. So it's back down here. So what this is telling me is all of a sudden it shot way up and now it's on its way down. And this is it's correcting itself to go to where the stock, I don't know how to explain this except like where it deserves to be, where its valuation is adequate. But it could keep pumping itself up, but I like to buy stocks with a solid foundation. And this means a stock that is not pumped up by other people buying it, but is pumped up from the intrinsic value of the stock. And so we saw before, how do I get out of here? All right, so we saw that the stock had good numbers, healthy financials, not like overly impressive management effectiveness and all that, but it was pretty good. So good everything, but the only thing that is the valuation, that was pretty high. You can see the PE ratio again, 879. So this tells me is this company, in an optimal world, it would not be $563. Maybe it'd be like $200, and then that would be the perfect company to buy. As you can see, this one says overvalued too, and this is like calculated by all the valuation measures of Yahoo Finance itself. But at the same time, don't buy it just because it's not overvalued. Just keep that in mind. Holistic review process. But if it does dip a lot more, and I think it'll be going closer to fair value, and this seems like a pretty strong stock. And and then last thing you do is you just go here, look at some news articles, what are they working on, all that, obviously I don't have enough time to go through all these news articles. You can do it yourself. Basically, mega battery in Texas, so you can see that they're growing. Obviously, we know Tesla has a huge market share in the electric motors. It's probably going to end up being the most dominant company of electric motors, of electric vehicles. And that's a pretty increasing sector, as climate change and all that. So I think Tesla is poised for great things. I think it's a little bit overvalued now, and I don't know, maybe after a few market corrections, which is when the stock goes down, but the company itself is still great. It's just that the stock goes down because of people selling it, so it goes closer to its fair value price. I think that this is good. So, just to summarize, in case I was kind of rambling there, because I make sense to myself, but I don't know if it makes sense to someone who's trying to learn. Tesla, good company, good financials, not oh wow, but good management effectiveness, solid stock, high price. Lower price, amazing. Higher price, if you think it's worth it, then you could. If you don't think it's worth it, it's not. I'm not here to give like advice, especially not on this video. This is just going through the process of investigating a stock. So yeah, there you guys have it. Hope you guys enjoyed or learned something.